Santa Claus Rally 2019. I hope everyone had a good holiday. This is the Silver Reports Weekly Review, where we take a look at all of the headlines that moved the markets during the week. On Monday, the markets continued to move up. The Dow closed up 96 points, the S&P closed up 2 points, and the Nasdaq closed up 20 points. News that helped move the markets came out of China. China announced that it will cut tariffs on frozen pork, pharmaceuticals, and some high-tech components starting January 1st. But the big news of the day came from Boeing, where CEO Dennis Muilenburg stepped down. The markets appeared to love the move. The stock was up almost 3% on the day. Illinois Congressman Jesus Garcia felt the resignation was long overdue. If you don't know, the resignation is due to the fallout from the two 737 MAX crashes. Muilenburg and Boeing have spent 2019 trying to correct the issues of the plane and get it back in the air, but to no avail. 2019 has been a disaster, but investors shouldn't forget what Muilenburg was able to accomplish while at Boeing. When Muilenburg took over at Boeing in July 2015, the stock was trading at $140.48 per share. The stock has more than doubled under his leadership. I don't think he should have been fired after the second incident, as most people have expressed. The plane was developed under his leadership. I thought he should be the person left in charge to correct the issue. After almost a year, he hasn't been able to correct the issue. He resigned, and part one of the Boeing drama is done. But someone still has to get the 737 MAX fixed and back into the air. On Tuesday, in an abbreviated session, the Dow closed down 36 points. The S&P closed down less than a point, and the Nasdaq closed up 7 points. Not much news on Tuesday, but Aurora Cannabis received another downgrade, this time by Jefferies, which downgraded the stock from a buy to a hold after resignation of Cam Battle, the company's chief commercial officer. The company has been on a major losing streak in 2019, as has most of the Canadian weed companies. Aurora has lost more than 60% of its value, its debt continues to mount, it continues to dilute its float and shareholders' investment, and there's news that a director sold more than 1 million shares of his holdings. There are other issues like the company missing revenue guidance, no time frame for when the company will be profitable, and oversupply of marijuana in Canada. The Jefferies downgrade was light compared to the GLJ research coverage, which put a price target of 0 on the Aurora stock. The marijuana industry is in an interesting place right now. When Canada's legislation to allow the recreational use of weed passed, business people and investors saw dollar signs, millions, even billions of them. But too much happened too quickly. Marijuana companies popped up out of nowhere, attempting to take advantage of the new legislation and apply the business model of growth over everything. Now, a year into it, investors want to see profits or a path towards profitability, and a lot of the companies participating in the weed industry can't provide one. This is the time when weed companies in the marijuana industry will be shaken out or bought out cheaply by well-funded, well-run companies. On Wednesday, the markets were closed for Christmas. On Thursday, investors put their holiday gift money to work, pushing the Dow up 105 points, the S&P up 16 points, and the Nasdaq up 69 points, kicking off the Santa Claus Rally. The big news was the Nasdaq making all-time highs and closing above 9,000. While all the markets are making new highs, investors can get a sense of security from seeing the Nasdaq hit new highs because the Nasdaq index is made up of companies many people, investors and non-investors, are familiar with. All the FANG stocks are in the Nasdaq index. Tesla, Microsoft, Pepsi, Adobe, Nvidia, Qualcomm, or a few others that are in the index. The index is tech heavy, and seeing it rise and make new highs is a good sign for the future of tech. And over the past 20 years, when tech rises, the markets follow. In other news on Thursday, Uber co-founder and former CEO Travis Kalanick cashed out all of his Uber shares and resigned from the Uber board. Travis, who was originally brought in to advise Uber creator Garrett Camp, eventually took over as CEO in 2010. He's credited for making Uber the name it is today, but he was forced to resign due to sexual harassment allegations, abrasive leadership, and worst of all, a video of him berating an Uber driver. Since his resignation in June 2017, Kalanick has been watching Uber's success and failures from afar, but being the entrepreneur he is, he didn't sit still. He developed Cloud Kitchen, a shared commercial kitchen space for restaurant and food delivery services. While he hasn't spoken about the new venture much, he has been able to entice investors to get on board. Saudi Arabia's sovereign wealth fund invested $400 million into the startup in January. It's a small operation right now with cloud kitchens in Los Angeles, Chicago, and San Francisco, but I can see this being a big thing as we change the way we eat and how we secure our food. Still believe Uber will be a winning investment over the next 3 to 5 years, but a company like Cloud Kitchen likely has less regulatory issues ahead of it than the one still facing Uber after all these years in business. Kalanick cashing out and putting his money on a winged horse just makes sense. And what does this mean for Uber now? One analyst believes the split is good for both parties, but I'm not sure if that's the case. Founders and co-founders like Travis Kalanick, Elon Musk, and Jeff Bezos, they're thinking 10 steps ahead. They have ideas of places their companies can go that the person off the street doesn't have. I see entrepreneurs as creatives. I see outside hires, the investment banker and analyst turned CEO as disciplinarian. They'll keep things in order, which is good, especially for a company like Uber that is bringing in tons of revenue, but is losing a lot of money. Investors need someone who can tighten up the balance sheet and curb expenses. But new companies also need creatives. They need people pushing the limits. They need the Mark Zuckerbergs, Travis Kalanicks, Elon Musk, and Jeff Bezos. With that said, that's not me endorsing Travis. He had some real screw-ups as a CEO, but the company needs to find an entrepreneur to replace Travis on the board. On Friday, the Dow closed up 23 points, the S&P closed up less than a point, and the Nasdaq closed down 15 points. It was a quiet day in the markets and should remain that way until the first Monday in the new year. The three major markets all closed up on the week, with a big jump up coming the day after Christmas. In crypto news, the week's big news came from Google, who removed hundreds of Bitcoin and crypto-related videos from YouTube, affecting several creators. Initially, it appeared Google was going after Bitcoin again, but it was later deemed a mistake and the videos were restored. Price-wise, Bitcoin continued to range during the week, but was up slightly from last week and trading at $7,207. Ethereum was trading at $125, slightly up from last week. Litecoin was trading at $41, and Ripple ended our week at 18 cents, down a penny from last week. Crude oil closed the week out at $61.69 per barrel, up 2% from where it was last week, the second 2% weekly increase in as many weeks. A big winner for the week was Aurora Therapeutics, which increased 38% on the week. A big loser for the week was Invesco India ETF PIN, which dropped 22% on the week, likely due to the protest over a citizenship law that critics believe is anti-Muslim. If you're ready to get serious about investing and creating wealth, check out our latest newsletter, The Silver Report. Serious investment ideas presented in a way that the experienced and novice investor can understand. If you're ready to master the markets, check out our newsletter at civilreport.com. Also, a link to sign up to our weekend article, In Focus, is in the description below. And any headlines you want to read more about, the link to the full story is also in the description below. Thanks again for checking out the Silver Report's market review. This channel is dedicated to anyone who wants to start investing but doesn't know how or where to start. If you have any questions, ask in the comment section, like and subscribe, and may your next investment be your best investment. See you next week.